Take us behind the curtain a bit on Treasury. And this is such an important job that Donald Trump is going to be filling for his Treasury Secretary. Yesterday, a lot of speculation. I reported, among those reporting, that Jamie Dimon is one of the front runners out there. And then there's Steve Mnuchin, who's also a front runner. They're having a meeting today. What do you think about a business guy like a Jamie Dimon becoming Treasury Secretary?
Well, I think it really depends what the president-elect wants. Does he want a cabinet of very strong leaders or not? And I think he needs to do some soul searching, because some presidents want cabinet secretaries who are more there to do their bidding. Other presidents say, no, I want 2 or 3 cabinet secretaries who are really strong and going to be out there and driving an agenda. And I think President Trump needs to decide for himself, or President-elect Trump, what sort of person he wants there.
Well, Jamie Dimon's a strong-willed leader. I guess that's 2 enormous egos. I mean, what is he going to do if he's the guy in the job in terms of too big to fail? He's coming from a too-big-to-fail bank.
That's a concern that I would have, but it's not my call. The president-elect would have to make that determination. And again, but fundamentally, I think the president-elect needs to decide his own leadership style. Is he comfortable having very, very strong independent voices, or does he want people who he says, listen, I want you to go turn right, and that person's going to salute and turn right? And I can't answer that question.
No, of course you can't. None of us can. But I guess what I'm asking is, should a business guy be there? Or should an outsider be there? I mean, do you want someone who has the experience of running a bank like Jamie Dimon does, or not?
I think the advantage is, if we are in a crisis, I think Secretary Paulson's experience running Goldman Sachs was very important to us navigating the 2008 financial crisis. But if it comes to pushing regulatory reforms, and maybe it's reforming Dodd-Frank and coming up with new bold proposals that we can actually get through the Hill, there's probably arguments to be made for someone who spent time on Capitol Hill.
What about Dodd-Frank do you think is too onerous, that should be pulled back? What would you like to see change? We know that change is coming. Donald Trump ran his campaign on the fact that he wants to roll back regulations. You're here talking about too big to fail, and have been, and the dangers of too big to fail. Sure. So talk to us about what you think is real important to keep in Dodd-Frank, and what actually might be too onerous.
The biggest banks need a lot more capital, and the regulations need to be greatly simplified. Simple, common equity at much higher levels is the best defense against mistakes, against future financial shocks. So that's what we need more of. What we need less of is regulation on the small banks. They're not systemically risky. They're getting caught in the same regulatory net. If we really tackle the problem of the biggest banks, we can relax regulations on just about everybody else. The economy and the financial system will be vibrant, and we won't have these big risks that we have today.
Let me ask you about the Federal Reserve. A lot of people questioning whether or not President-elect Trump is going to change the leadership at the Fed. How is Janet Yellen doing?
I think she's doing a great job. I have a great admiration and respect for her. She's not political at all. I know people from the outside say the Fed is political. I'm in the room with my colleagues. We're on different sides of the aisle, I think, philosophically in many cases, but when we sit there and think about monetary policy, I have great confidence everyone is looking at the data and making their best recommendations based on the data.
What's the most important data that you look at?
For me, it's core PCE, so core inflation, it's inflation expectations, and it's headline unemployment rate. Because we've had a story the last few years of labor force participation going back up. People re-entering the labor force or staying in the labor force. That's a really good thing. We don't know if that can go on for a month or another year. If it can go on for another year and not be inflationary, that would be very good for the U.S. economy. We need to see that play out.
Now, there's a lot of expectations recently because of Trump's economic plan and this market reaction that we are seeing some hints of inflation. What do you say?
Well, I want to, in some sense, this could be help to the Federal Reserve, because we've been coming in under our inflation target. So it seems like the markets are expecting more deficit spending or tax cuts, which could, in a Keynesian way, be somewhat boost to inflation and boost to growth. Let's see what the Congress actually passes, but at least it's looking in the right direction.
Are you surprised rates have already moved the way they have?
I am.
Why?
Well, it just seems like it's a pretty big move in a pretty short period of time, and there's a lot of speculation about what the new president or the new Congress is going to do. We just don't know yet, so I'm reserving judgment. Let's wait and see what they actually do, but we are paying attention to the market.
Yeah, what a move. 2.5% already.
It's surprising in a short period of time.
On the 10-year. Neil, it's really nice to see you.
Nice to see you.
Thanks so much. Neel Kashkari joining us there. Coming